This is Boulder, so I guess we can expect anything. And I just want to acknowledge Uma is not going to make it. She had a far drive. She's amazing. And if you want to hear from Uma, which you should, we have a fun YouTube video on the topic of money mindset where Uma was one of our speakers. So feel free to check out the YouTube for She's Independent, and you can check out Uma's voice there. With that, I'm going to hand it over. I'm going to both engage in this conversation and dialogue as an angel and not just moderate, but really be a perspective and voice in the room. But quickly, let's have Ina introduce herself.
Yeah. Hello, everyone. Is this working? Yeah. Awesome. Yeah. Welcome on this snowy day in May. My name is Ina Winterle. I'm an executive coach. I work with executives and their teams to help them through the AI transformation. I have a 16-year background in technology, worked for the big G for a very long time. And became an angel investor last year. And I wanted to share a bit of my story with you. Over to you, Natalie.
Yeah, so I'm an angel. I also have an institutional or professional finance background, and I have a portfolio of about 45 investments. I run She's Independent Investments, which Ina is a part of, Uma as well. Maybe some future friends who are also going to invest with us. Michael, wherever you went. And I love investing. And I'm just going to say it. I also sometimes love money, sometimes. But we're really going to get into all of it. We're going to talk about stories. We're going to talk about what we look for, the mindset, how to step into and launch as maybe a funder, and what we look for when we're evaluating and running diligence on companies. We only are going to spend about 40 minutes, and then we'll open it up for some Q&A. But if you enjoy the conversation, we hope this is really just, an inspiration to get further involved, to, start digging in, to start thinking about, more strategy with regards to maybe your portfolio, how you're fundraising, you name it. So we'll kick it off. So to start, I guess, we'll have Ina, you go first. Tell us a little bit about your money mindset, what shaped it, how it's evolved, especially as you've moved from operator to investor.
Yeah. So you might have recognized by now, I have an accent. So I grew up in Germany. Anybody here from Germany? No. Okay. Then tell me a bit about how you grew up in Germany and what influences your money mindset. So my background is coming from a blue collar, white collar family. My dad was a contractor. My mom was an accountant. And I grew up with 4 unwritten rules. That is very much what I think represents the German money mindset. So rule number 1, you have to work hard for your money. There is no other way to get money, but you have to work for it. Rule number 2, you only spend the money that you have. You will never, ever make debts. Unless, and this is the one exception in life, you buy a house. And then you pay it off until you die. Right? That's the only way. Rule number 3, and this is mostly dedicated to my blue-collar dad, who read the evening newspaper every evening and told me all of these managers who are earning six-digit salaries, they are all bad. They are responsible for all of the bad stuff that happens in the country. Rule number 4 is really, really important because it shapes how you spend your money. Because you don't spend your money, you save it, right? Maybe not under your mattress, but in a bank account. And that is how you continue until you die. So, left my parents, went to university, studied economics, political science. Turns out, just saving your money won't get you anywhere, right? I looked at the numbers, didn't work out. So, rule number, 3, gone. Then I started working. And I worked hard, so I followed rule number 1. Turns out, at some stage, I was the 6-digit earning manager. And I don't think I'm really bad. So rule number 2, down the drain. Then, I started investing. I bought my first apartment with 30, my second apartment with 32. So I invested actually before, and I actually invested in more than one houses. And I learned something that my parents never told me, which is if you invest in strategic debts, you actually get tax benefits, and that will help you long term. So while I went through the process of growing up, I learned money mindset, the beliefs that I learned during my childhood don't help through and won't get me anywhere. And I think that is what changed, really understanding that there are fundamental beliefs you have about money that might not bring you anywhere and get you anywhere. And then really overcoming that helped me to really adjust and change my money mindset.
Thank you for sharing that. Oh, went quiet. Can you hear me?
Yeah.
No. Oh, you can?
You want mine?
No. Weird. All right, cool. We'll just share this one. So I was a financial professional, and then I stepped into angel investing later in my career, or not that late in my career, within the first decade. But basically, I've been writing checks as an angel for a couple of decades, and my money mindset has changed drastically. First, I'll say stepping into allocating as an angel, meaning it's my money, it's not on behalf of anyone else. That was a big flip, right? It was, this isn't on behalf of a client or, the bank. This is my money. This is what I've earned. And so stepping in to write these checks, it was like an awakening of oh, wait, these are my decisions. I can support what I want to support. And recognizing that I could flow this into companies meaningfully, even if it's only a check of $10,000 and maybe it's up to 50 or something if it's me, but it was this amazing experience of I don't need to be beholden to what all these other people want to do with their decisions. I can make this decision. And it was really transformative. When I received returns, because on my portfolio, I've now had about a dozen, or I guess half a dozen, returns with cash, but then others where there was opportunities and I didn't necessarily take liquidity. But on the returns, realizing, wait, I'm good at this. That was a complete other transformation, saying, okay, I can trust myself and I really enjoy it. And so I think for me, it's been an ongoing evolution. I'll just say it. I just bought a Porsche, right? And for me, that was kind of a big deal. And I didn't get a super nice one. We were talking about this, right? But I got a cool one and it has red leather interior and I like it. And I was just what do I want to do with my money? I don't want to support Elon, and sorry, no, not to make it political, but what do we want to do? And how do we want to celebrate? I'm seeing these smiles in the room. How do we want to flow our capital? And a lot of us were raised with this scarcity mindset of don't do this, don't do that. But wow, to be able to exercise and to recognize I'm cash flow negative and I'm absolutely fine with it. I fucking love what I do. I think I'm always evolving that money mindset. So that's where I am today. We have a bunch more that we're going to talk about, and we'll talk about how to kind of transform some of yours as well. But the next kind of opening question, when you write a check, what's the conversation you're having with yourself?
Yep. So I didn't write too many checks yet. I'm new to this. I'm the rookie in the conversation. But here's what I thought, what I went through when I wrote my first check. So for me, it started with the founder, right? Because there needs to be some trust. I've been in corporate for 16 years and I had my fair amount of amazing leaders and my fair amount of, how to say this politically correct, poor leaders. And I've seen leaders who were really able to gather a team around them and to bring the team together and make them move and work toward a vision and go the extra mile. And what I really appreciated about these leaders were that they were open about feedback. They were okay that they weren't good at everything. that there were gaps, and they were actually adjusting to these gaps and hiring a team around them to fill these gaps. And so that is what I just translate one-to-one when I'm investing. I want to see that I can trust the leader, that they are not doing this for the ego or just because they want to be amazing, but I want them to have like a vision and really believe in their product, be passionate about the product, and really be aware that they need to build an amazing team around them. Second thing is the product itself. So I see angel investment as my way of giving back and as investing in the community where I see gaps. So that is where I love to invest in femtech. So that is like definitely an underrepresented area at the moment. Or I love when I see, oh, there is a founder that worked on a product where I didn't even see that there was a challenge, and they want to solve it in such an amazing way that I just really want to be part of this. Last thing, I want to see the ROI, right? I'm in it for the win-win. So yeah, coming back to like the basics of angel investment, invest in 20 companies, right? One will definitely bring the gains and will cover for the losses. So these are the three things I'm thinking about. What about you?
All right. So I started using this term quantum alignment. Hey, like we're the quantum hub, so why not? I'm looking for so much. And at the end of the day, I think founder is so much of it. But I'm thinking everything's energy, right? Money's energy, people are energy, the company, what are they outputting? And so I'm looking for such alignment. Do I want to see this in the world? Do I think this is the team or the founder that can do it? Right? And so founder is everything. But to Ina's point, like I also want to make a good investment. I'm not just investing for charity, even though I'm investing in, I think critical gaps and things that I really want to see in the world. But I like to say, you can invest with impact and still, step in a good risk reward. And I think one of the things that, anyone in this room, if you haven't done the thought experiment, like what's your why, right? Like it's huge. Why do I invest? I invest because of the gaps. I invest because of the journey of what I've experienced as a woman. I invest because of the lack of, funding that is flowing to women and diverse owned. I still invest in all types of folks, but at the end of the day, what's the culture? What is that business? And I'm not just going to invest in like another widget or gadget and, software play. So I think understanding really what drives the team, that's probably the most pivotal thing, but there's so many things that, we look for in diligence. Hopefully you're running diligence as an angel. And some people might also just honestly look at it as charity and just say, hey, I'm first check-in and like, I'm going to lose it. But it sounds like both of us, we're looking for some level of conviction for the deal to potentially work. And I will update, if you have a portfolio of 20, it's not a guarantee one will work. I mean, you have to be thoughtful with building this portfolio. So at the end of the day, just really excited to find the things that are like a hell yes. Okay, so let's move over to some more questions for you, Ina. You spent 16 years in tech, leading global strategy and operations before you started writing checks. What did this teach you about evaluating these early stage companies? Feel free to share thoughts around strategic capital. For anyone that doesn't understand that, that's like coming from a corporate. So Google, for example, might be investing in a business. Maybe they're going to be an acquisition path. But that's when we say strategic capital, that's what that means.
Sure. So I joined Google 2 decades ago, right? And that was in a stage where they were still a growth company, not a value company. And so one of the first things I learned on the job is agility, which means back in the days, it was you had an idea, you got 6 weeks, and then you were either proving to be successful or you failed fast. And I think that is a very, very relatable skill to an early stage company. Not going through the waterfall, doing the whole year planning, trying to, follow like the roadmap, but really being agile, like in how you approach product development and how you approach bringing something to market. Does it fail? Then fail fast and try the next thing, experiment. And that is something I look for in investors. Do they have like, not investors, in founders, do they have like this agile mindset? Because I promise you, there will be something coming along the way where you need to pivot. So will you be completely overwhelmed by this pivot, or are you capable and agile enough to take it on and just steer in another direction that seems to be more successful? So that is my first learning from my 16 years in corporate. The second thing I would say is I worked a lot in vendor operations. So I did a lot of due diligence on vendors, vendor projects coming into Google. And as part of that, I developed my own due diligence system, which is, okay, what is your USP? How do you differentiate yourself from the rest of the market? What is your vision? Are you actually just thinking, okay, I want to survive the next year? Or do you actually have a vision? What is like my 5-year vision? Do I have an exit strategy? How do I want to utilize synergies? Is there room for partnerships? And that is something that I use and can just translate one-to-one into my due diligence framework that I use for assessing startups. So I would say these are two things that I'm taking over and that I got taught in big corporate, but are still applicable to investing in early stage companies.
So let's dig a little bit more into resilience. And this is such a big one. I used to, when I was younger in my career, I would probably just put grit up there on this like pedestal of like, this is everything. Now in, let's say, the more evolved Boulder spiritual consciousness space, I know I'm looking at you too. I love it. I'm going to say grit and grace, which I heard the other day at a women's salon around investing. But how well do you navigate these things? How do you grow and evolve? And not just like killing yourself and making it work, but maybe there needs to be a pivot, maybe in a point that Ina made earlier, which is huge, is what is that ego? Because if you think you can do everything, which maybe you can, but you probably can't, how is that going to play in? So for me, like I love, and I shouldn't say love, but I love it, seeing or hearing the stories, like the real gritty stories of this is something that happened, and this is how I picked up the pieces, and what happened next. And literally VCs will like throw tough things at companies and founders to be like, how will they navigate this? So I just want to call that out because I think the resilience piece is like really substantial. How many people in here feel resilient? Put them up high. All right. How many people have some work to do in that area? Still facing the trauma. Okay, great. Come meet theyese women up here. They're raise your hands. They're amazing. All right. EFT, anyone know it? Okay. So how do you separate, I personally connect with this product to this is fundable and I potentially want to write a check. Where does conviction end and bias begin? Do you need to have experience in that sector or industry? And what gets you really excited?
And Natalie, you totally get me with this question, right? Because, I think it's important to see both sides. And for me, I'm starting to build my portfolio here, right? We were talking about 20 companies, right? Or 25 or whatever it will be in the end. So I still have the luxury of choosing because I definitely want to diversify at some stage. But at this stage, I can still completely follow my values. And who here in the room has ever gotten a mammography? Okay, so I think you can relate that it sucks, right? It hurts like hell. And like half of the population after the age of 40 has to go and get it like on an annual basis. So for me, that is not a nice to have. My aunt died of breast cancer. I have a cousin who was 30 who died of breast cancer. So for me, this is serious business. So why has there not been any development in the last decades? And that is like where it's really easy for me. If somebody comes up and tells me, hey, I have a better solution here, that is where I'm personally involved. And that is like where I'm very much relate to my value system. Now let me show you the other side, because I'll try to live my value system. That means that I've seen pitches that were actually amazing, But I really didn't want to take them on because they were not aligned with what I believe in. So I don't know if you remember, there was this amazing pitch. It was a gentleman. He worked on teaching kids through games online. Super solid business model, super solid founder. The business side of me was like, go for it. And the mom in me was crying. No! Kids are spending too much time in front of the screen already. I don't want to support that. I don't want to give parents another justification to let their kids be in front of the screen. And I know this is now very much me. I don't assume everyone in the room will have the same emotion here, but this is my value. And this is what held me back from investing in this pretty amazing company. So coming back, I don't have a good answer to this yet. I'm still figuring out my journey here. For what I've told myself now, the pond is big enough. So I think there are enough companies that I can support while diversifying my portfolio. And I give myself a bit of more time, to figure out how to really differentiate on this question.
Love that. And I want to actually speak to that company. And Tracy, give a raise your hand little shout out. Tracy is both an active investor with us at She's Independent, and she was a teacher. And I think you might have asked that question in the room, but basically, if kids are going to be on screens anyway, why not give them something amazing where they can be learning? And the beauty is we can come at this from different perspectives. But when you realize somebody has either conviction or maybe real life experience in a category, or they're like, oh my gosh, like women's healthcare has been completely underfunded, to find those investors where they're going to want to allocate and want to write that check, that's a really big deal. So if you're out there and you're thinking, I want to fundraise and I'm just like generically, emailing people and I'm using this AI tool and I'm just like trying to get people on the phone, that's not going to work, right? But if you're like, hey, I saw this is your portfolio, I saw this is your background, like check out this business. I think it's going to make sense. You like exotic cars, whatever. This guy, basically like that's how you get in there, right? Be more human, be more creative, be thoughtful. And so even though, Ian and I care about a lot of similar things, probably in a values perspective, like we also have different lived experiences. So we may be very different in terms of how we write checks. And angels, by the way, are that great bridge before institutional capital always, because a lot of venture, they're not going to talk to you until you're closer to that, commercialization, like Series A kind of thing, often depending on your industry. But yeah. Final question for you, and then you can pepper me a bit. So you've just recently launched as an angel. Talk about the transformation a bit.
Yeah. So I told you my past investment story. I actually want to start this question with referring back to my grandmother, who I love dearly and who told me very early on in life, you cannot change the world, but you can start in your community and you can create impact there. And that is really, really important because with angel investment, I think I can follow this purpose because I can invest in small companies, in my neighborhood, in the areas where I'm interested in. And that gives me a feeling, this purpose of actually bringing this to life, to invest on the same time, like driving the impact, as I, actually gain from it in the long run. So that is really, really important to me. So when I wrote my first check, I actually asked Natalie to take a picture of it because boring, I actually wired the money. But I just wanted to keep and have a picture for my two daughters who are 8 and 10 and who I actually want to inspire because I didn't get that financial education early on. But I want them to have that. And I want them to feel empowered to do something like that when they grow up. And it should be something normal for them. They don't need to go through all of the hoops that I had to go to learn and to get to this. So that is like why I really am 100% in favor of angel investment. And that is my why, because I can create an impact in areas that are important to me.
I love that. And I also want to shout out our checks as angels. They feel a lot more meaningful than investing in public markets, right? Like, who cares if you go put money into some publicly traded company? And so saying, oh, we're going to wire you this, she's independent, for example, maybe it's only 100,000, maybe it's 70,000, maybe it's a couple 100,000. But the fact that that's meaningful and that's energy alignment or great people on your cap table, in ownership, that's a big deal, because you take bad money, like that's also a big deal. So yeah, I just wanted to add that.
Just to add one more thing, I think a lot of people underestimate or overestimate how easy it is to get into angel investment. And you don't have to be a billionaire. You can start with little money. And don't get me wrong, the time at the moment is really good, because like all of the big VCs, they are investing in AI. So there are plenty of amazing companies around that really, really deserve this funding.
I love that. Okay, we're going to transition so you can ask me some questions,
wow.
And then we'll leave some time for Q&A as well.
Awesome. So huge Simon Sinek fan here. So Natalie, tell me about your why of investment.
Okay. Who knows me in this room, right? You probably all know it. So I'm an engineer, mathematician, went to Wall Street, worked in tech, worked in private equity, and just a lot of, we're not going to give her the opportunity, or, we're going to treat her a certain kind of way because, I don't know, she has long hair, she's a woman. Lack of mentorship, sponsorship, you name it. I'll also throw this out there because I think the mental health piece is so big. So everybody be taking care of yourself, especially if you can't stop cloud coding, like take a break. Michael, you know what I'm talking about. And I'm in the camp as well. Okay. Like I'm cloud coding my ass off. But mental health, we've had numerous losses in my family. My mom, my cousin who was 17 at the time, 2019 and 2020. And I share this stuff, and this was suicide. I share this stuff because my why isn't just for them, but I bring them with me. And it's not just about my portfolio, but it's what are we doing collectively to launch other amazing and brilliant people so that we can transform and impact our community, our mindset, right? The companies that are getting funding. There was a women CEO. It's different than women owned because she's stepping in equity. She's not a founder. So she's partially women owned, but it's a company that has this wearable device to wear for women who are postmenopausal and osteopenia, where they need to increase bone density. And you wear the device 3 days a week, at least 30 minutes a day. It's called OsteoBoost. And this CEO, she's telling us about the business. She's like, yeah, these VCs, they're like, it's a niche market and it's all women in the room. We're like, are you fucking kidding me? Like, women are like a good portion of the population of the earth. And it's like, this is a device that's so accessible. And we're like, what's your pipeline? Like they weren't commercialized yet, but it was like 7,000 in the wait list. And, we did the diligence. What do you mean you're going from 0 to 1,000 units manufacturing, and we dug in and we loved it. And pretty quickly they got to 3 million of ARR, like right after they launched. And this is just one of those stories of like, great, women necessarily, more women stepping into investment roles and leadership roles. Like that changes the dialogue. It changes who gets funding. And so we also invest in men, but just recognizing these gaps, like I couldn't feel more strongly about the work that I do and saying, how are we showing up? And by the way, I'm on stages being crass and sometimes swearing. You've heard me today. And sometimes I won't get invited back. Great. But whoever changed anything by playing nicely? And so like, I really think by calling these things out and saying, hey, Y Combinator is an example. They're not supporting Black women. Like that's not okay. Right? So making sure that we use our voices where it matters. That's how I show up. And I know that it's giving permission for, some others to do the same.
Thank you so much.